I sold all my shares at $79, making a profit of about 30%, but I think I sold too early. Hey, what's up? My name is Rishabh Sawant. I'm not a financial advisor, but I like talking about stocks for entertainment purposes. Last year, during the pandemic, I hesitated and I missed the opportunity of buying this stock before its 250% rally throughout 2020. On 16th April this year, pin interest fell over 13% in a single trading day from about $84 to $73 per share. I pulled the trigger and I bought some shares. In May, the stock continued its downward trend. I picked up some shares at $65 and then it fell down to $60 and I averaged down. It bottomed at about $54 in mid-May, but I was too scared to add more. And by now, pin interest had made up about 20% of my portfolio, which I thought was a little too risky. With a cost basis of $60 per share, I decided to ride this out till I recover my initial investment. I sold all my shares at $79, making a profit of about 30%, but I think I sold too early. I believe there is still an upside potential in pins as long as the markets remain euphoric. Let's take a look at the financials to determine if pins is still a buy today at a price of about $77 per share. First up, income statement. The company is consistently growing revenue. In 2017, they made a revenue of about $470 million. In 2018, revenues grew by almost 60% to $755 million. That's insane. In 2019, it grew by 51% to 1.1 billion. These are epic growth rates, and this was before the pandemic. In 2020, as expected, revenues grew by another 48% to $1.6 billion. The trailing 12 months revenue is at about $1.9 billion. The net income is bad though. From 2017 to 2019, Pinterest was consistently making a bigger loss year on year, peaking at negative 1.3 billion in 2019. In 2020, they managed to reduce the losses to negative 121 million, which is its second best loss or second lowest loss since it IPO'd. Launched in 2010, Pinterest was the fastest ever site in history to reach 10 million monthly unique visitors, and this was during a time when you could only join Pinterest through invitations only. As of Q1 2021, Pinterest has about 478 million active users, with 98 million in US and the rest in international markets. Despite many social media companies going public within the first few years of launch, Twitter was about 6 years and Snapchat was 6 years as well. Pinterest only filed for an IPO in 2019, almost 9 years after launch. As long as the markets remain euphoric, the stock will continue to rise in the short term. However, in the long term, the stock will only rise if Pinterest's fundamentals start to get better. In April this year, the stock fell even though the earnings were good because during the earnings call, the management gave guidance to a decelerating user growth. Keep in mind, decelerating is different from declining. Pinterest is exposed to exactly the kind of industries you want to be exposed to during and post pandemic. During a lockdown, it's home based cooking recipes and home decor. Post lockdown is going to be vacation planning and weddings. Q4 2020 revenues from the US market were 582 million and revenues from the international market were 123 million, totaling 706 million for Q4 2020. Q1 2021 revenues dropped to 485 million, which was obviously lower than Q4 2020. However, Q1 2021 revenues were 78% higher than the same quarter from 2020. You'll be hard pressed to find companies with growth trajectories like this. If we look at revenue projections, we see an unequivocally bullish picture. These are estimated revenue growths for the years ahead, and these are revised on a quarterly basis. This could very well change in the future for the worse or for the better. Revisions bottomed last summer and have absolutely flown since then. If we look at 2026, which is in green above, revenue estimates bottomed at 3.3 billion last July. Today, the same estimate is 9 billion. Pinterest is doing all the right things to boost the top line, and this revenue revision trend is a beautiful thing if you are long on Pinterest. ARPU is one of the most important metric for a social media company. ARPU is the average revenue per user. International ARPU nearly doubled year over year in the first quarter, while US ARPU was up by half. With growth numbers like this, Pinterest doesn't really need MAU growth, monthly active users, because it is rapidly expanding its ability to monetize the users it already has. MAU is just a bonus. ARPU is a number that shareholders will want to pay keen attention to in the coming quarters. But so long as we see Pinterest continue to improve its monetization of users, particularly the international ones, the stock should continue to go higher. At $77 per share today, I'm a little hesitant to buy the stock, but I definitely regret selling this stock so early because I did have a really good cost basis of about low 60s. So that's it. Thanks for watching and have a good day.